video, I'm going to show you exactly how to really trade order flow, how to combine the different types of structures to get you into profitable trade setups. So stick around to the end of this video because I will be showing a trade breakdown, and we are live right now on GU. So as always, guys, I'm going to kind of start off with the theory to explain it correctly down here on the path. And in fact, I'll just come up here on the price, and what you'll see is order flow is bearish, right? And so we have the new high that just put in the new low, and that is order flow defined by the external swing points in the market on the higher time frames. And then you can see price makes its progressive way back up to the swing high in the top 50% of the trading leg, which brings it back into a system that we have called premium and discount. It brings us back into the premium of the leg. Now, price action on the lower time frames, because we trade with fractals, as this is coming up on the H4, the internal trend shifts bullish when we have, this low puts in this high puts in this low puts in a new high. So we have a lower low into a higher high. And the higher high there is the shift, right? It's the shift of trend. We can see now that the actual trend in of itself has shifted bullish. And so there are, of course, many trade opportunities to take inside of the setups up in here, in areas like these, point of interest like these, point of interest like these, until eventually we get to where we want to go to. And then we take a trade in the direction that the order flow is, which is overall bearish. So that's established. The order flow, external higher time frame swing points, is bearish, with the last low being taken out here by this swing high. So here's our swing high. Down here is the low that the swing high put in. So here is the swing low. So now we're ranging between this high and this low. And we are expecting, because it's expectational order flow, that somewhere around the top 50%, so kind of anywhere in and around here, for us to have a reversal. Now, the first thing that I see is all of the liquidity inducement right here. That liquidity inducement is perfect liquidity buildup for our point of interest up in here. And out of this point of interest, it's just an area of interest. There's another one literally right at the peak, just areas of price where we can expect the realignment, as we call it, right? So as we can see, the order flow is bearish, but the trend is bullish, because if we drop down a time frame, and even on this time frame, you can see low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? So you can very clearly see we are bullish. And so there was, of course, a lot of long setups based on our pro trend counter order flow model, but the higher risk to reward trades come on the pro order flow, pro trend model, when we see these low down here get taken out, because expectational order flow is set to take out these lows. And this is live price action, so we won't get to see exactly what plays out on our trade until, we either hit our take profit or we get a break even. So we already have some partials off now. Another thing we can very clearly see is the huge level of liquidity buildup that we have all along this leg, which is perfect. Just built up mitigations, built up liquidity, ready to then just take with the sell-off as we come down. So essentially what we want to see in an area like so is a realignment, right? We want to see the, on this time frame relation, we're on the H4, so we want to see the M15 time frame essentially realign, right? So when we get into our POI, as you can very clearly see, the whole way up this price leg, it has been bullish, right? Order flow bullish on the M15. This low put in this high put in this low. When this high was taken out, that was our bullish shift. And so we knew now that the higher time frames were going to pull back and have some overall bullish continuations, where there would have been absolutely would have been trade setups in areas like here. There would have been a setup available here, there would have been a setup available. Here there would have been a setup available if it tags in. I'm not sure if it does. It does. Yeah, and that's it. And then we get up to our POI, and just, you know, in each of these setups, by just trading our pro trend model, there's another entry here. Again, not sure if wherever this one actually does tag. It looks quite low. No, that one just falls short. But yeah, these setups for sure. Trading the pro trend only model, taking out the highs. Yeah, taking out this high that put in the low. And then it does. And then you have another opportunity when we are taking this because it put in the high. This would take out this high. And then we have this trade, which you could take into the demand level, supply level, sorry, up in here, which gets hit up here. But then when we look in here, we can only really be looking for shorts. And how do we get into our short? Because this is where we really want to be trading out of. So how do we get into our short? Well, first and foremost, we need to see the realignment, right? We need to see that the order flow, because now it's pulling back. So this is trend pulling back. We need to see the shift, right? And then this shift will leave a supply zone, and then we'll be able to get involved here, or if we're doing involved there, it'll break again and we'll get involved here, and we'll take out the lows down here. Because we're expecting the lows to go out, we're just getting in now on the trend reversal, because we understand the order flow. And so in this example, this is live on GU. Live on GU right now, we can see that the lows that tapped us in to the supply, sure of a wick above, neither here or there. There's our shift, our breaker structure to the downside, which does leave behind our supply range that we could have taken shorts out of, but would have missed out on the tag. Price pulls back, puts in a new low. Okay, cool. Where does the new low get formed from? So the new low gets broken here. Okay, it comes back up, mitigates, then it gets broken in here. And then you ask yourself, okay, where's that from? That's from here. Okay, we failed to tag in first. However, that is liquidity buildup. Okay, why don't we, trade out of here? Well, very clearly, our stop losses are in a liquid area. And so you don't want your stop loss to be in a liquid area. You want to use the liquidity, or you will be the liquidity. And so by keeping this level, we can see this level right here as liquidity, this level right here as inducement. We have many questions how to select the correct supply and demand zones, which we have a full criteria on in the course and PDF, and that will give you the exact explanation of how to literally avoid areas like this, because it's essentially sat on liquidity. And then the criteria, of what makes this a strong probable zone. And that is essentially where you would be looking to take your shorts out of, and did take shorts out of on a 15-minute, and taking profits off, partials off here at these lows, because this is the low that put in the high that failed to break the swing high. And failed to break this high even, just close above with a wick. This was the sweep of liquidity, which is, as you can see, very manipulated. And then the 1 to 7.3 for the first target, taking partials off, moving stops over to break even, and then allowing it to play out and take out all of the liquidity for an end target of 29 risk to reward. But you're not emotional because you've already taken partials off. You've already moved stops to break even. Whatever happens from there happens. And just want to paint that picture for you. If you just go out now to the 4 hour and you look at it again, it's very clear to understand because it's just order flow. But you can't trade order flow alone. You have to combine it with internal and external trends. But it's very simple to see. We've come back into, the high of this leg that put in the new low. We've come back, we've shifted, and now we're looking to take out this low because the order flow is bearish, and we would be expecting it to take that low. And so guys, that wraps up and concludes our video. Whatever plays out here, you can follow along at home. I hope you guys really did enjoy that video. If you are new to the channel or are not subscribed to the channel, do go ahead and click that subscribe button and like this video. If you found any value, please